Okay, hi there, guys. Just go through the usual beginning procedure. Just let me know if you can hear me loud and clear. Yeah, I'm good, Gino. Hope you're doing well too, mate. Just waiting for people to slowly edge their way in. Um, oh, perfect. Now, if you are new, just remember if you're not getting a clear picture, just remember you can go to the bottom right-hand corner of your YouTube screen. There'll be a little spinning wheel. If you hit the spinning wheel, go to quality on YouTube and go to 720 high def, I think it is. And that way it should come through a lot clearer, crystal clear anyway. All right, so just remember also there will be a bit of a delay between what I'm saying. So if you do put up a question, just remember that I'll get around to it, I'll answer it. Might be a few minutes later than what you expect. All right, so welcome guys. Welcome to Trade Setup. It's the 19th of July. A bit to talk about today. If you are new, welcome. And just what you can see on the screen there, you can see a bit of information. The top left-hand corner is Twitter. Feel free to join us on Twitter, or feel free to like anything on Twitter that pops up. For anyone that does, thank you very much. It's much appreciated with helping us get our name out there a bit. Facebook at the top right, and the bottom right-hand corner is subscribe to us at YouTube. So if you subscribe to us there, hit the subscribe button, then you'll get anything that pops up, anything that we upload to our site there. Now, yeah, like I said, not a lot to talk about, but I just want to cover a couple of things. So today we'll obviously just go over to see where the US is at. Not a lot happened overnight. I think the Nasdaq was pretty flat from start to finish. I don't know who it was. Didn't have the best. They got sold off on probably missing targets or something. It might have been Amazon, um, Google. Either way, the Nasdaq was flat, where the Dow was up and the S&P, the broader market, the S&P was up. So still going well. I think their earnings they were expecting up around 20%. It's gone about 21%. So it's been adjusted up slightly. So a few companies that are coming out are beating estimates. So they're doing quite well. It's a good reporting season. You've also had in the US, you've also had, I was going to say Yellen, I forgot his name, Powell, Fed Chair Powell, that mentioned, he said they're growing quite well. He said the economy is strong. They're up at the top end of their target, in inflationary target of around 2 to 3%. They're hovering around there. He said he's happy. Previously, he said he's happy to let it go there before raising rates, but I think he is also wary that you will need to raise rates if it does start, inflation starts getting out of hand. So that sort of is obviously really good for growth. Now, he also did acknowledge that if they had a trade war that continued to escalate, he said you'll probably see the flow through effects down the track. If they don't come to some sort of agreement, I think it's in about a month where China, the next tariffs, the next bout of 10% on 200 billion tariffs is due. It's give or take about a month. I think it was 5 weeks away, maybe the end of mid-August. I'm not sure the exact date, so give or take about a month away. Um, they're meant to implement those tariffs. So he did mention if nothing really gets sorted out between now and then, come to some sort of agreement, they start implementing more and more tariffs, you're going to get the flow-on effect into the economy. It's going to crimp growth. He said, but either way, it is quite strong. They may just hold back on an interest rate rise. They just have to wait and see. They've got a few more planned for this year potentially. It's expected a few more this year and two more next year in 2019. So we'll see how that goes. Now, let's minimize that screen. What I also want to talk about is just the landscape of the market at the moment, and just generally the shares. And well, it's not a very good share, but generally the shares and what we're seeing is probably a prime example. But we'll go over that. JB, let me just write that down. I think that's a good example of picking one. Yeah, and it just makes making the trades harder to come by. I was reading a couple of good articles from a fund manager saying that they don't have a lot on the radar. He said it's just whereas previously when you had this, the market was on the highs, there was still areas to go into, move from one sector to another, and still find a lot of opportunity. Now he said it's a bit more constrained. He said it's tougher to find some really good opportunity. Obviously, they look at things differently than what we do. But I've also found a few, we've been stopped out of a couple of our alerts. So we're really going sideways at the moment. And it is tougher. You get ones that kick on. They don't kick on as much because the market's not so bullish. And there's obviously those outlying Trump effects, I'd like to say, um, constraining the overall market, the growth. And there's always, especially in Australia, when you've got commodities heading south a bit, um, demand from China. No one knows exactly what's going to happen, how that's going to be affected. So everyone's playing it cautious. So when you get something that kicks on, technically looks really nice, looks great, kicks on, it doesn't go on as hard as what potentially it would have in the past. And they're just stopping. We're finding a lot of our good ones are stopping dead in the water, and they just go sideways. And a lot of the times they'll come back a bit harder than what you would expect. And that's just a function of the markets at the moment. And other ones which do break out, they run out of steam quickly and then turn around and retrace on you, stop you out. So it's a bit, the action's a bit choppier. Um, what I saw, I think a few guys are chatting on the forum as well, talking about different ones popping up, and there is a lot that's, I think, whether or not it's just choosing ones that are trending, that have got a solid good trending base, um, in place, and they're heading higher, whether they're the ones to pick, or I'll go through what I normally look for. What I'm looking for in a trade, it's harder to come by. So it may be just that you're just trying to find stuff that are technically trending very well and just going, well, if the market does roll over, it's probably going to be the bigger boys. If you've got something that's a trend is intact and has been for quite a while, that might be the ones to go for. They may, rather than pull back, they may just go sideways or not kick on as hard. All right, we'll get into that in a second. I'll show you a couple of examples of what I'm talking about and everything. We'll go through the markets. ASX is, look, doing okay now. You can see, just sticking that up, you can see, I'm just going to move my computer a bit. A couple of good days. So good day yesterday, which we have been bucking the trend a bit, as in the US was up, we've been heading south for a couple of those last couple of days. I think the US was up there, and we've just been going lower. And then we turned around, they were up on Friday, and it's, am I missing a day there? I must be missing a day. Why am I missing a day there? Just 1 second there, guys. Oh, no, 19th, that's today. All right. So, yeah, what was I saying? So the US has been going up. They've been steadily doing all right. I mean, they've got earnings coming out better than expectations, a lot of better than expectations. So you don't expect that to roll over just yet, if it's going to roll over. But you would have expected us to get dragged higher with the positivity out there. The global economy is doing well. Europe will probably pick up if the US dollar is going to rally. It's going to, obviously, the euro is going to go down with the US dollar rallying, and that's going to help a lot of the companies over in the European Union or the UK. A lot of exporters who rely on a weaker currency. So that's going to be good. So they generally pick up with a weakening currency, and that's what looking like. If that's the case, then there's twofold with the US dollar. The US dollar might pick up because of the trade war issues. It's more of a safe haven bet. Plus, you're looking at interest rates. So raising interest rates means a strengthening economy. And a strengthening um, currency. So there's a lot of factors why the US dollar should head high. So I think that US dollar heading high, it's going to benefit the country. They're growing well, they're doing well, and it's also going to help you out Europe, which in turn you'd expect to help out us. I think it's just we're a bit crimped because of well, this is my take of it, of what's happening with the trade war. I think it affects us more. Um, but anyway, we've got the ASX has bounced back a couple of days. It's done quite well, and I'm still expecting this trend to head high. Nothing's broken, even with what's out there at the moment. We saw this little pop up consolidation sideways, and we had a little push up to 63. Um, and then we're sort of, it's, you can see this price action is not conducive of a big sell-off. If the market was looking really weak, you'd expect it to just go on with it and take out this minor level through around 61.75, but it hasn't. It's popped up off there. So really just want to see if it can sort of chop around a bit. I would expect it to chop around a bit as we hold above 62, and then look to kick on and push up through 63. Again, we'll just continue to see how the US plays about, and if they get a heavy sell-off for whatever reason, then I think we'll join in the fun. Now the S&P, it just keeps ticking away, so that's pushed through that 28 mark, which we said, holding higher lows. And this is a broader market. I don't think like the Dow. The Dow looks a bit more iffy than the S&P, but the Dow's got some of the top companies which got exposure to these trade wars. They're going to be probably hit a bit harder. And I was obviously going to do a bit more to the overall index, which is only 30 in the index opposed to 500 in the S&P. So the broader market kicking on, holding the high, most recent high low on the longer term is the 27, pushing up. This could just keep grinding its way up to the highs around 28.80. They're about 70, 72, 73, 73 mark. So it could just keep grinding up here. There's nothing to say. I mean, it is extended at the moment. The action is extended, but there's nothing to say it can't just keep ticking away nicely. And maybe after once we get reporting season over, you might see a bit of heat come out of that market, but I would expect it to continue that trend and build a higher low. It's just these moves, obviously, from was it say 27.90 thereabouts, this little previous high. Yeah, 91 pulls back to about 70, so it's a 90-point move on the S&P. It is a fairly decent move, fairly chunky. So if it does sort of continue higher, and then have that sort of 70, 80, 90-point move back as well, it's going to put a bit of heat on our market, but we just have to see how our market stands up. The Dow, it's looking a bit better. It's looking potentially like it's going to roll over up here, but now you can see it's been hovering around overbought as well and still putting on gains. It's ticking up to this previous high around 25,400. See if we can get through that, or it might react off that zone. You would expect an initial reaction off there. If it just pops through, pops its head through, and then pulls back, I'll be a lot more positive. If it falls short, for me, that's more of a bearish sign. It's just because a lot of times when you're looking at people are eager to take profits, they'll take it prior to a level rather than just let it run through a level. You'd never, I mean, if you're looking to take profits and you're feeling very negative on the whole outlook and you're holding off taking profits just yet, you would never put your profit target on the other side of a resistance zone. It just doesn't make any sense. So you'd more than likely, if it does fall short, it can be a little bit more bearish than anything. Now, if it does pop its head through that resistance zone, for me, it is starting to look a bit more positive. And you'll probably find that it will react through back below, build a higher low, and then go again. Just have to see how that plays out. FTSE, starting to look a bit better as it's starting to hold these high lows. And even this red candle, it rejected the previous lows. It did take it out, but it's bounced straight back again to close back above around that 670, 600 mark. A couple of good green candles the last 2 days, last two sessions. So that's looking a bit better too. You can see, I'll just draw it up. Actually, probably don't need to, but I might. You can see what we're looking at. And what I'm always liking to see is that the market has just going across the highs there. It's a bit thick, isn't it? Just going across the highs there. You can see it's just broken up. So now we'll be looking to see if we can just chop around, holding higher lows as we go back up. And potentially sooner or later, if it's well contained, more of a channel, I'd rather see things, have a more of a pullback and hold higher levels. And then you're going to get that acceleration potentially up through 79. But we'll see. It's either way for me. It's looking okay on the FTSE. Now the DAX again, it's holding up okay. It's probably better the weekly chart on this. You can see it's got the highs up here at 13.5. We had a retest down towards that 12,000 mark, even washed out those lows, but that's when it started holding up and keep rejecting just below that 12,000 mark, and we got this pop up to build a lower high. We're sort of looking like we're coming into a point of agreement with lower highs and higher lows. As we do that, you just be wanting, if you're going to get involved in the DAX or the market over there, just to see if we can come off a higher low and you can bit of a squeeze in once we start breaking out of this contraction. You want to be looking at it when it's breaking out rather than just stuck in that contraction, because you never know when you're in that contraction, you never know it's going to break to the top side or the bottom side, break out the bottom. So just wait and see for confirmation. But either way, that's looking better than it was a little while ago. That's probably about it. Nikkei, again, that's actually looking a bit better. You can see that push down from the highs, and it's more just taking a lot of heat out of the market since the start of the year. That's what it's looking at on the Nikkei, and the Hang Seng, not quite as good, but you probably wouldn't expect that to be quite as good. Actually, weekly too. We'll just see if we can hold up around that 28,000. It's got to take out 29,000. It's got to pop up. You can see that trend. MAs are down quite solid. It did pop up to the MAs, straight back down again. So if it takes out the lows at 28, head south, you're looking for a bit more pain on that market. Just keep an eye on it. If it could wash that support zone out and pop straight back up and then start to move up, But again, it's going to take more time to figure out that market. All right, so where to from here? We'll have a look at. I just want to chat about any questions just on what we're chatting about there, the overall market and what that could do to us. We'll get back to the XJO. I still think that weekly looks good. You know, that weekly's well and truly an uptrend. We are getting a bit toppy up here. See, just the last, we've got a spinning top. I don't look at them much, but I just noticed that then for the first time, spinning top the last week, which is not the most positive sign, but to me, that's only a small piece of a puzzle, a very minor piece of the puzzle. The fact that it's up at a high, we're getting a bit extended up here, but look, we've only just popping our head up there. We've done that before, and continued to go higher, another 100 or 200 points. So we can easily do that, go another 100 or 200 points higher from here when we're in overbought territory. And the weekly, some heat's come out on the daily, and you can see that type of price action at a couple of days down, couple of days up, couple of days down, taking out the lows only on the mild, a few points. What's the low? 62.09. Basically 10 points. It only took out the lows by 10 points before it retraced quite a bit. So that's not a bad sign at all for the bulls. If I was a bear being really bearish on this market, I'd be thinking twice about that. The MAs they're not really expanding. You want this type of thing when it gets ahead of itself. You can see the MAs come back in. They contract a bit, but they're still. I've got a 20 and a 50 on that. The 20 is still above the 50, and then they start to expand, and the market starts to rise. And you're always going to get it rising, coming back to the MAs, rising all the way, and it can just continue to do that. And it looks like it's just bounced off the MAs a couple of days ago. So if we continue that type of price action, that's why I'm expecting. I want to see if a higher low can be put in. Maybe around the 62.25 or so. And if it does have a bit of a pullback, but get supported there, whether it's intraday or just on a daily basis, a little spike lower and then reject that and bounce back up. And I think that it's going to drag in a few more buys on our market. All right, banging on about those markets there. Any questions? If not, we'll get stuck in there. I just want to talk about a couple of other little things. So any question on that? Chuck it in the chat now. All right. Now, also feel free to start chucking in some stocks there. Type them into the chat, and then I'll get stuck into them in just a minute. What I want to touch on now, all good, perfect. What I just want to touch on now is just the changing sort of a landscape. Is what I'm seeing anyway. I could be completely wrong, which I'm not really generally. But just the differences in what I'm seeing when the market's going from, when we're starting potentially a run, when you're starting, say it was around 6,000, we're starting that run up. There would have been a lot more stocks that are setting up better. They got a lot more potential. There's a lot higher probability on it working out. Whereas at the moment, it seems a lot of them they're showing some setups, but they look like low probability setups. And what do I mean by that? I just want to see if I can get an example. Ansel. So, sorry, I'm going to get a phone call in a second. All right, you're all still there? Yep. Yeah, okay, we'll go through the setup too, ST2. Now, this is probably a good one. Let me just check the weekly. Yeah, we'll go through this one as well. So I think it was JB that I just saw before. Now what I'm saying, what I generally look for, what I like to look for, let me just close that. I just want to draw it up. Oops. There we go. So as you know, anyone's sort of been following what we've been talking about in the past, what I'm generally, say we're looking at a weekly chart and we've had a leg up. I'll start that a bit better. You've come out, you've based a bit, then you started to have a good leg up. Say by the time I'm looking at it, I'm looking for something where the longer term trend's up, and it could be from a daily push out of contraction on the weekly or so on. Say our anchor's way down here on the weekly. This is what I'm technically looking for. You get this bit of a macro correction type of price action on the weekly, and I'm looking to take advantage of the next potential leg up when that's a new weekly leg up or a daily. But either way, I'm looking for it when it's generally what I like to see is the market longer term trend's been up, it's contracted a bit. You got that macro correction, you got that secondary leg up when you get the extra. What this move's done here is really cleaned out a few of the late buys, clean them out of the market, put them back on the sidelines, and it's starting to re-establish some high lows again. And I'm looking to try to, even if I have to go from a weekly down to a daily, to try to find those entries. It could be just off a daily. I mean, the daily could have a similar type of price action. You get the trend up, it corrects, and then it starts to head up again. But this might be a better setup on the daily when you see the weekly trends just basically going like this, right? And you just match these sorts of corrections here is what I'm talking about in a macro correction on the daily charts. So it probably makes a bit more sense now. Is that making sense, guys? So I'm looking for a nice weekly trend up, and I also don't want to be too far into that trend up because I think the higher you go or the longer that trend's been established, it could be. I just personally find it a little bit tougher to jump in because I'm always associating every sort of trade I do. I'm always associating a theoretical probability to it, and the longer, more established trend on the week up, the lower probability I add to that trade. I mean, of course, there are times when I'm completely wrong and it just keeps trending up and you look at it and you just watch it going without you. You've had the daily set up, but the weekly charts kept me out. It's been too far gone for me. I'd rather stand aside and go and check something else. And when the markets are going quite well, they're quite healthy. There's a lot of setups. I mean, there's a lot of these setups that pop up. What I'm finding at the moment, my style of trading, there's less and less of them. Or when you get, even if it does play out and you get the setup like this, a lot of the times they can pop up some bad news and bang, they come straight back down again to take out the lows and they have to try to reset. You get stopped out. So these ones are a little bit tougher. There's less and less of what I'm seeing, what I normally look for, or what I'm seeing. If that's making sense, what I'm trying to spit out there. So they're harder and harder to come by these type of setups just at the moment. It's just probably a factor of the market. The market's been going up where we are getting a bit overcooked on the daily charts on the XJO or the ASX200. So of course you're going to find when you're getting a bit overcooked on the XJO, it's got to take a bit of heat out of the overall market. And whether there's sector rotation, they might be going out to something that's been performing, rolling out of that, rotating into another underperforming sector and starting to boost that underperforming sector. But it looks like a lot of the sectors actually been going quite well anyway. So it looks like maybe as we're getting up to the highs, all-time highs not far off, a few hundred points from here. Each sort of, the stocks that have been running, they've either ran or they're well entrenched at the moment, or they're a long way off from running and they're just, lack of a better word, a crappy stock. So I guess what I'm trying to get at is when it might be just as we're running up into the highs, rather than what I'm looking for here is trying to pick a weekly trend and maybe trading something that's well established on the weekly. We're getting a bit of a pullback, so we're starting to see that corrective action. I'll draw that up. Let me just clear this out. So what I'm starting to think now, and I'm seeing more of, is just going, okay, that's your weekly trend up. We've had one big leg up. It's just a pullback on the weekly, but it's a macro correction on the daily. We've hit another pullback. We've got extended up here, and we're currently into this price action. Now you can break that down on the daily to being something like that. All right, and then you start to get your daily setups. So ideally, I just want to change color. I might have to start looking to get involved in something off a daily chart, but on a well established weekly trend up, rather than looking for an early weekly trend up. I'm looking to take advantage of a couple of strong legs up on the weekly. So that means my payoffs are a lot bigger. Maybe I just have to look at it and be a bit more active. Taking these nice little setups on the daily, knowing that weekly is a bit stretched and it could easily just run up into the highs and then turn around and drop out of the sky there as you get this major weekly macro correction. Does that make sense? So every time I'm looking at a weekly chart that's well established like that, I'm potentially looking for a macro correction on the weekly chart, which means the daily, you get a setup, it pops up and then just completely capitulates from there. You get a lower high in the weekly, you don't get very far before you turn around and get stopped out. So that's my mindset when I'm looking at trades, when I'm generally just looking for something to trade. So that's why I'm ideally always looking for a setup on a pullback on the weekly here, the same type of setup, knowing that potentially it's got another leg or at least one or two legs up on the weekly chart, and you really get your bang for your buck. Does that make sense? So I'm just trying to have to change my mindset, thinking, well, I actually do think the market's going to keep ticking higher. I think potentially the trade war, all that sort of stuff they're going to work it out. It's going to put a bit of pressure on the market. It's probably going to, more than anything, I think it's just going to crimp or contain any move up, especially in the US, but over here as well. But I do ultimately think that trend is well established in the weekly on the XJO. It's ticking up nicely. The daily's ticking up nicely. Um, just looking for those pullbacks, but I think if that's going to continue higher, I might have to start looking for setups that are more like this, just taking the chance that it's well entrenched. Okay, it'll just continue to run up, and we're going to continue to run up into highs rather than worry about it turning around. Looking for that macro correction on that weekly chart. Does that make sense there, guys? So there you show you, mate. So I hope that makes sense. I think it's just, we're talking about a few. We've got here, probably not so much JB. So JB is one that, okay, it's had this little pop up. You've corrected here. We found a base through 22, a little pop up. That could be a major lower high on the weekly. And just looking at that daily, even though the daily looks potentially this price action, you've got this minor higher low here at 22.50, say, you can see that we're getting a bit extended up into that resistance. So I don't like that for a long. I'm just finding potentially if you forget about the stochastics, for instance, that could be in a bull market. That would probably be one that's going to pop out through the highs. You get a pullback, you got your high low, and then buy into it, knowing that you're going to start targeting up towards that 29 mark. But you would love to see that the stochastics down towards below 50, say, when it's up at these levels. Instead, it's taken a fair bit of energy to push it from 22.50 up to 24, up into that resistance zone. So that's what I'm saying. A lot of the setups that may look okay, I'm just not adding that high probability setup what we have in the past. If I'm looking at the other one we just had before, what was that stock? Anyway, I'll probably have to. It's not JB. Oh, here we go. Ansel. So Ansel is one that's is probably more along the lines of just what I was saying before. That macro, the weekly trend. Forget that weekly trend. It's well established since the start of 2016. Okay, it had a big sell-off down here from early 2015. Come down the lows, and since then it's just been holding higher lows, pushing up. Bit of a correction there, but pretty much held the anchor level through 21, 2050, and continued to move higher. And you can see that that's getting more established, but we're coming up into a resistance zone at 30 bucks. So that's what I'm saying is where I wouldn't add, looking at this chart, I wouldn't apply a high probability setup to this one where we are at the moment. Just looking at, having a glance at this, where are we? So what we've got is a leg up here, potentially that sort of corrective action here, even though it corrected sideways. And then we're looking to this leg up, potentially it could just take us up to 30. So we are getting probably a bit long in the tooth for that trend up, that recent trend up from way back at, was about 20 bucks, $21 or 20.50 from this lows down here. We're up at around that 28 mark at the moment. So it's well established. Nothing's new to anyone. Everyone knows that the trend is up on that weekly anyway, but it's still, if you're looking at the daily and you're looking at that weekly to extend up to 30.50, potentially up into that resistance zone, it could be worth throwing your money at. Normally, I probably wouldn't. I'll be looking for something that's had a leg up, you contracted, and I'm looking in here rather than looking later on in that weekly trend up. So in saying all that, this is probably a good example. I think on a daily, it's starting to set up too. You've got this little pop up, pull back to the MAs. You got some rejection just below 27, and it's starting to lift again, potentially with a move up through that high of 27.84. I mean, that daily trend is definitely well and truly holding higher lows. That's your Dow theory to a T. Up, pull back, higher high, higher low, higher high, higher low, all the way up. So we just built a higher low. Potentially, we're going to take out these highs at, what was that, 28.31, and head our way up to that 30 buck mark. Risk reward, probably not fantastic. I like those, like I said, I like those ones that are starting that weekly trend up and getting in nice and early on the daily and try to look for those nice healthy payouts. Whereas this one, you might get quite a few of these little trades. Okay, they're going to make you money. That's great, especially if it kicks up to 30. That risk reward might be 2 to 1 thereabouts, I'm guessing, or maybe even 2 or 3 to 1. Could still be worth throwing some money out there. Is that making sense, guys? So I think the market dynamics has slightly changed. Whereas you might be looking for trend. These don't sit too well with me, but hey, you've got to trade. You've got to change your trading style depending on what conditions you're trading in, and you've just got to be wary of what the conditions are and try to piece that together. All right, I hope that makes sense. What I was just babbling on a bit there, what I was babbling on about. But let's get into it now. We've got a couple of stocks that have come in. That's great. All right, so first in, if there's any questions on that, just chuck it in there. I'll answer it once I see them pop up. AMC. All right, so AMC. I mean, it's mainly the weekly chart. Actually, personally, I probably wouldn't touch this just yet, because what I'm seeing is, I'll just draw it up, maybe some major corrective action on the weekly chart. So if this is you've obviously can see that it's popped up to the highs. So you got this leg up, macro correction, leg up, pull back. It failed miserably off that zone. You can see this big red candle on the weekly, popped up to retest, couldn't get through, had to take a deeper correction. But it's really just around that. You can see that 14 buck mark. It's tried to support that, so build a major high low. It's popped up. Then it started to fail again. You've got the lower highs working. So at this stage, you'd be really worried about that stock. You've got a double top up here. You've got a high low in place. And then as it played out, that high low was broken. So the anchor to this trend up, the anchor was at that stage just through here. Just through here is your anchor at that stage. That was broken later on. So it makes sense. You got this move up and it's off a double top. This move up. What we've got recently is a grind up, and you can see the grind up from, hasn't really gone from, it's gone, oversold. It's popped its head up from oversold in here to about where we are at the moment in overbought territory. So you've got to wonder, how much further can this go? And if it can't go much further, you can see that you've got that resistance is coming up potentially into that sloping resistance down. So this could easily be, if we just draw that in a different color, that leg down. If you extrapolate that, if we can do that, I'll do it in a different way. We essentially got from there to there. I'm just guessing if it does pop up a bit higher, it could easily pull back, and start to be looking towards that $12 mark, because we could have at the moment, and that's purely because we've got a double top. So just what we said here, when the market pulls back, it retests the highs again. So that there is a double top also. So this is all your technical patterns you've got to take note of. It retests you to double top. If it can't get through the first time, it's got to have a deeper correction. So it's just like what we said about that, the long jump. If you can't jump a certain distance, take a longer run up and probably get that momentum to really push up and get that jump that longer distance. The same in the markets. If you can't get through, you probably need a bit of a longer run up. So have that deeper correction, clean out a few more traders, reset itself and try to go. The problem is it did that on a minor scale and it's got a double top. It couldn't get through that level on that major scale on the weekly. So what we're doing now, we're going through that period of taking a longer run up, and we might just be one leg down, that little corrective action. That's because of we're getting this move from overbought to oversold, taking a lot of energy in buying, a lot of buying pressure to really push us up, and we can't really get too far. We can't break it out of any downtrend. We're not really doing too much. We could easily build a major lower high here and have a much deeper correction and push through 1325. So that's your weekly out. That's the way I'm sort of reading this weekly outlook. For that to change, ideally I'd want that to go from overbought to oversold, but falling short of this zone, of this low. And that's where you'd be starting to go down to your daily. And that means that maybe that's cleaned out a few more traders. It's going to have another go. And at least then, if you go down to your daily and we start to look at that type of scenario playing out, so this is your price action here. We've moved down, we've popped back up, we come down and we start building a high low. When your stochastics are down, near the oversold territory, we're down here and we start to pop our way up, and you start to see buyers edge into the market and potentially, well, you get that sort of contractive action on a more major scale. And I think that would, you know what your risk is going to be. Then you can have a trade on that on the daily charts, off your high or low on the weekly charts, and see if it can pop up to that 1650 again. And even if it fails, okay, you might still have a little profitable trade there. Does that make sense there? That's your daily. Sorry, that's your weekly. And again, that just plays into that daily. We're just coming up and do a bit of a zone here around 1463, 1465. Just up there now, just testing that high, the previous higher high. And you can see that's popped up, pulled back, built a higher low, popped up. We may just go a bit further, but that might all play into just what we spoke about. This market popping up a bit further, maybe up towards your 15 and then failing. So we might get up to only as far as 15 where we find some, that weekly sellers starting to come back in again and knocking price down. Again, we'll just have to see. And I don't like the way that it's pushed up from just above 14 to where we are now, 1460. It's gone from oversold to overbought. It's taken a lot of effort just to get it back up to the highs. So for me, that daily is not looking so great. I wouldn't buy it on a breakthrough here anyway because of just the daily chart, but looking at the weekly, okay, I wouldn't add a high probability to that trade working out for me. All right, now S32. I don't like, for some reason, this is the only code that I can't get. I've got to go south, click on S32 and get a chart up. There we go. Yeah, so the S32 setup, start off on the weekly. You can see that that's a trend. That's just what I was saying before about, your weekly trends are up, well established, and then potentially just going down to your daily chart to look for a good little setup. Now that's pretty clear. The market's heading up, pull back, head up, pull back, head up. We've got a bit of a washout here on these highs at $4. The market's corrected off there, but it looks like it's in a prime zone. It's gone from overbought to oversold, down around that 20%. So it's taken a bit of energy, but it's falling well short of that. If this is a weak market, by the time it hits oversold, you'd expect it to at least be retesting a bit like this. Let me just draw that up. Now, so when it's come up, so you've got this level through here at this stage, all right, you can see it's clear level, pushed up, got up to 4, come all the way back down, and you can see that's went from oversold to overbought, back to oversold. So it took a fair bit of energy, but that's come all the way back down. Then it's rejected that 310 zone or $3, 310, and started to lift again. What's happened here? We've just pretty much rejected the $4 zone as well. But what's happening? We've gone, and this is why I like to look at your stochastics and just try to get an overall picture. To me, the bias is definitely up. You can see that it's quite clear. The trend is up. Actually, if I just draw that in, you might find, yeah, there you go. So it's a prime zone. For me, that's holding up. That's about to hold up. It's taken a fair bit of energy to go from back up at that $4 level to push back down. Selling pressure's in. It's well and truly in, going from overbought to oversold. But it's got to oversold and it's falling short of these lows at 310. It's falling short and it lines up technically really nice. Just 1 second there, guys. All right, just 1 sec there, guys. Let me go on mute for a second. My daughter's just walked in. Okay, there goes, back again. Yeah, so we're seeing this, and this is why I like it, because one, you're in that weekly zone. I like that zone. I like what it's saying to me on the weekly, and that's just that, pushing up, reversion to the mean style of trading, coming back, all these sorts of things. It just seems to be playing out again, back to this longer term trend up. So if you go down to the daily, I'm not saying that's set up on the weekly by any means. So flicking down to the daily to see what the picture's showing, and to me, it's showing, I'll just draw it up. I'm anticipating that weekly trend continuing. And by saying that, we've got a double top. A lot of times you don't trade against a double top or, trade short against a double bottom. But when the weekly trend is well established and then you get this type of price action, just remember we're coming off a double top there. So generally you're going to get those sellers in, form a lower high, But you can see that's what we always talk about. These two legs down, it's not looking seriously weak. It's just that selling's coming in. And if you're looking to buy it, you probably let that play out. And then ideally what I'd like to see by the time I think it gets through 370, it's going to be breaking out of this contraction lower. It's found the base, it's found the higher low at 350, and we're going to be working our way back up. Now, obviously, we're going to be looking at that $4 zone to see what happens, whether it reacts at that $4 zone or whether it pushes straight through it this time. We've got a touch here, potentially a touch just here. It's failed a few times now. This might be the fact that it's working off this high low at 350. It's coming from a higher level. So you can just see that buyers are continually stepping in here, stepping in again here, and it could be playing out quite nicely. So that's why I'm happy to give that a go. The weekly trend, I'm working off that longer term weekly trend holding. We're in a prime zone on the weekly, and we've got enough coming from the overbought back to around that 50% mark to really start pressing up to $4 again. And maybe this could be the time when we just break straight through, but we'll see. That's why I do like it. It's more of that style I was talking about, just trying to adjust your trading, looking for something potentially that's well established and looking for that well established trade to continue playing out. Yeah, and S32 is a good little company, isn't it? Or good big company, isn't it? Hope that makes sense there. WBC. Hope that makes sense, ML. Yeah, so the banks for me, it's more the weekly charts. This doesn't look too bad. I mean, if you're just looking at pure the daily, we're still working up against a downtrend. We're trying to push up out of a downtrend. All right, and that downtrend hasn't broken, even on the daily charts. If you're looking at this type of price action here, well, look, it probably has. You'd say that's just started to pop its head up out of that downtrend. So you've got to think maybe it's found a little base here. We've got a bit of a washout. So that's where you'd always be flicking it back to the weekly. Now, this is your most recent anchor to the downtrend. You can see that it's pushed down, maybe consolidated through here, pressed down, popped up, pressed down, popped up, pressed down. So that's your most recent, serious anchor. And that's led to that move down. We've retraced. So we're looking like we're breaking out of contraction. But even that, for me, is it too early? Look, you can take it on a break there. I just think the banks tend to do it a bit. They tend to wash out the highs, and it can easily wash out that 30.25 and then retrace. Because if you flick it back to the daily, the weekly, the weekly's still well and truly established, and we've got miles away from the anchor. Now the weekly is a different type of beast there, I guess you'd say, or a different type of chart. We've got that's more the trend, and even shorter term, you've probably got this sort of trend here. So we really, I mean, you can easily pop up to 30.50 and then fall over. But I would just personally like to see, and it sort of goes for all the banks. We've got this level here on Westpac. It's around that 28, 27.50. That's why I'm expecting that's more of a washout. But I don't know whether that's a washout just yet, because until it breaks the anchor, which is around that 30, was it 30.25? This high through here, until it breaks that anchor, breaks up and through, this trend is, for me, is still intact on the daily at least. And then I would like to see, if I go back to, I've just drawn it over it, back to that daily, I want to see, okay, that's your trend down. I want to see it pop up. And then I want to see a high low start to hold. So I want to see a bit of a pullback, and then I'm happy to start to look to buy it when it's back on the rise again, off some high lows, and looking for that bit of a pullback. You find that it's a high low on a weekly and potentially a daily. It's a bit of contraction on a daily. And then looking for that to start, I want to buy it on the rise again, and I don't really want to take too much risk on it. Does that make sense? So that goes, for me, it's a very similar picture on all the banks. We're overcooked on the weeklies on all the banks, getting overcooked on Westpac. On the weekly, we're getting a bit overextended up here, and you can see that, okay, that initial thrust up, sell off, another thrust up, sell off. We could just keep doing that. It's going to be a tough gig, and you've really got to have tight risk if you're trading it off the daily charts. I mean, the daily on Combank, very similar. You can take it through the push up, just say you've got an inside level, 75, 74, whether you just retest that high and you end up getting stopped out, or you push straight up through the highs and have a deeper sort of a correction on the weekly. We don't know yet. But either way, it's more the weekly. I think the banks are going to play out in good time. I know everyone loves the banks. They're everyone's favourite to put in your portfolio, but I just think I'd rather see. I haven't seen anything sort of break on a weekly chart yet, and it's more the weekly. I don't want to jump into it from a daily chart and then end up that you're going against the weekly trend. Is this weekly trend is definitely down. We're potentially early stages of holding up above that 70 buck mark. So the weekly's down, the daily potentially is it up? And I'm normally looking at my MAs to say whether it's up or down. The daily's up, so that's conflicting opinions. So which one's going to win out, the weekly or the daily? I mean, that's all you've got to ask yourself. And then, is it worth jumping in just yet? So I hope that makes sense. WBC Galaxy GXY. Yeah, Galaxy of it's a funny thing. What I've read about Galaxy is not too flash, but technically, okay, technically I wouldn't buy it yet. I wouldn't buy it at all on the daily chart. I wanted to see, because this to me, this is not conducive of a rising market. All right, and it's purely because of the last few days. So if I'm looking at that on the weekly, okay, the weekly is looking good. Push up, pull back, build a high low, push up, pull back, retest that high low essentially, but then started, whacking itself up, pushing up again, whacking up again, holding that high low at 175, push straight up through $4. Um, got to 450 and then just really fell apart there. Now we've got to ask ourselves, looking at the weekly, okay, this could potentially be a zone to another high low. Okay, we're holding a high low on the weekly. This is the zone we're looking at, but we want evidence on the daily. We have to have evidence on that daily that it is holding. All right, so what I'm seeing on the daily is not evidence that it's holding up. Potentially, I'm seeing a bit of a sell-off through, and I'll show you you'll see it. I'm seeing more weakness than anything else. So we've had the leg up here, push up, retest that support. We've pushed up. Now we're really, if we're going to buy it, we're looking for this to be the potential higher low on the weekly basis. The problem is what I'm seeing, and you'll break it down, you probably don't need to look at the daily. You can see we push down and always sort of chop through here. We've washed out that level. Okay, we've pulled back. So at that stage, I'll be going, okay, we've washed out that level. That's not a bad sign. I want to see a higher low hold. I want to see it pop up, potentially retest it, pull back to build a higher low, and then I'll be happy to jump in. And then, so what I'm trying to do essentially is buy it on the rise. I'm not trying to buy it just by guessing that this is going to hold up. I don't want to sit and go, okay, I put my bid in at $3, get a good price. That's going to be a weekly high low. What if it just goes bang straight back down to 2? You bought it at $3. You haven't bought it on the rise. You really just chuck your bid in there. You're just guessing that it's going to rise. You're just guessing that that structure is going to play out, but there's no evidence. And if you take that back to the daily charts, this is what I don't like with Galaxy. On your daily, we found, this is that pop up, that pullback. Then you started getting this chop. So it started forming these clear levels around 360 and potentially just around that 290 zone. So it could just keep chopping around here. Okay, chop, 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 but still holding up. You never know. But that's not the way I like to trade, or I think anyone else really should trade. I'm not saying do what I say, but if you're a technical trader, you want to buy it off confirmation. Now, this move up here, you washed out the highs, all the way back down to support is not a good sign. Okay, and then you've gone from overbought to oversold, and then you get this pickup to 330. We've gone straight up to overbought, so it's taken a lot of energy, a lot of buying pressure, and it only got so far as 330, and then it started backing off. So you get a question: is if this is a strong market, if this is a strong stock, why is it falling short of 360? Why isn't it going straight up through 360? All right, if it's a strong market, there wouldn't be any sellers in the way. There should be a lack of sellers, more buyers. So the buying demand is a lot higher than the selling demand, the selling pressure. Does that make sense? You shouldn't get this pullback. I mean, so in essence, I would be standing aside just yet. It has to show me more evidence. I mean, if it turns around and pops up through 330, off right where we are right now, holding that high low, I might think twice about it. But right now, off that daily, it's not showing me the signs I want to see. All right, this could easily capitulate. There could be a lot more sellers, and then you've got some buyers that have tried to board it up here, buy it up here, tried to get that push up through 360. It's failed. They're going to have to turn around and join the sell side soon, especially if it pushes through 290. You're going to get And then what you'll get is this clear resistance zone at 360, a low high coming in play, and potentially a pressure on the downside, and that could push it through that support. Anyone who's been buying it through here is probably going to have stops below 3,280 or thereabouts. They're going to trigger those stops, and they're going to be selling as well. So they're going to join in the sell side and just smashing the buyers. Does that make sense, guys? So that's why at the moment I wouldn't be going near Galaxy just now. Fundamentally, it might be sounding okay, but I'd just be looking for that to be confirmed, and I want to see it take out 330 before I join in the joining with the buying pressure. Just I was looking overbought and is ready for reversal. Yeah, I don't know. I think there's a lot more room to move on the upside for the US dollar. The flows have generally been on the US dollar is there's been some selling pressure more than anything longer term, and the flows are more being outweighed on the sell side. So the net figures have been more sellers than buyers. Now it's turned over to more buyers than sellers, and you've got to remember there's longer term, a lot longer term players, currency movements between countries where they're edging out of the US dollar. Oh, sorry, now they're probably edging back into that US dollar. Now, if all the trade wars continue, there's going to be US dollar upside pressure, not downside. There's going to be upside pressure. If that abates, I still think there's going to be upside pressure because of the rate rises. You can't have a strengthening economy and the US dollar keep getting smashed. It just doesn't make sense because you'll get that flow of, overseas buyers are going to be buying into the US because there's a growing economy, rising interest rate, strength in growth there. They're all doing quite well. You're going to be potentially buying to US stocks. What are you going to have to do? You're going to have to buy US dollars as well to do that. So that's upside pressure. Yes, I don't see in the near term any downside pressure just yet on the US dollar. That's from a macro perspective, but look, we'll see. Triple T, Triple T. He's a wrestler, isn't he? Why didn't that? All right, there we go. Now this is probably a lot better example of something that I would technically look at. We don't need to go back, do we? Now that's a nice one, mate. And it's just one I think everyone probably just have on the radar because let's draw that up now. This is what I'm looking for. I think, okay, you've got this trend. It's probably, and that would make a lot more sense. This is your more established trend, your longer term trend. If anyone's looking to buy it longer term, they're probably going to wait till it gets a bit lower. Maybe that they're not going to muck around, but when it starts getting a bit ahead of itself, like this, and that, you can see the distance between here and here, the trend or the longer term trend up. You can see it's quite clear. It's getting a bit ahead of itself. It took out the highs here. You've even got this little retest just in here before we started going to more of a macro correction. So this is your daily move up. We got this macro correction, pulling back, popping up, and it's still, well, last line wasn't very good. It's still on the way down. All right, nothing's really broken just yet, but you're getting it. This action is getting a lot of these late buyers potentially from here and above getting squeezed out of the market. All right, we don't know how far this is going to go. Whether it's going to keep pulling back to sort of that, $1.70, $1.80, $1.90 zone in here. You've got this sort of gap. It could pull back. The longer term trend is definitely still up. The anchor for it is really way back, way back here to about $1.10. So it's got a lot of room to. It's still got some room to move back. It could easily. So until that corrective action or that corrective price action or that macro correction is finished, and you build a high low, I wouldn't be jumping in just yet. Even if you bought it at say 210, like I said, if you just sit on the bid, I don't think that's the best way to trade. If you just sit on the bid, because you never know what's going to happen. I would rather buy it on the rise. And by buying on the rise, I mean when you got this down movement here, I want to see it start to play out, and I want to buy it potentially through a clear resistance zone, off a higher low. Higher low is a sign of buying pressure. Buyers are stepping in at higher levels. They're excited about the stock. They want to get in. They don't want to wait. And they can only do that when the selling pressures come out of the market. Does that make sense? They're not up against much. So that's where you'd want to be buying it, and it hasn't played out just yet. So it could easily pop up here to 250. Maybe this is your 250 zone, pulls back, retests the lows, or builds a higher low off that, move up to 250, pulls back, and then buying it with a breakthrough 250. I'm just guessing that potentially that could be the level. but we'll see. But either way, that's the kind of price action I like to see in a rising longer term trend. It's correcting, and then you're looking to buy out of correction, and then you'll be targeting for that longer trend to play out and potentially a move like this, a move up like this type of move from here. And that would take you, I'm just guessing, up to 350, 60, 70. And if you can buy it around 250 or so, you get $1 in that. That's, good 40% move. So does that make sense? Yeah, I think that's a crack to keep an eye on there, Mel. All right, we'll finish up with a Z1P. Ali, I'll get into that. Z, and this is one that I've got an eye on. So you can see this. This is quite clearly this price action is lifting. It's on the rise. Just go down to the weekly. I mean, just that weekly, I wouldn't buy it here because the weekly to me, and probably the daily too, if you bought it through say 105, for instance, with a rise through 105, my risk would have to be about 95. And to be honestly, I was looking at this yesterday for the exact reason, potentially buy it through 105. I just didn't like this pop up. I didn't like that, buying it at the top end of a high of a strong day. Um, but either way, I would like to just see it hold above 90, chop around a bit, and a few more days holding these higher levels, and then buy it. But either way, you're buying it on the rise. So it's probably a really good example of what we're talking about with technical setups. The market's corrected here, popped up, held a higher low in here, and then it's led to a nice healthy rise, um, straight through $1.30. Then you've got this big pullback. Okay, it was quite deep. I know that it's quite a deep pullback. It's cleaned out a lot of these buys, pretty much most of these buys. Anyone who bought it through here is probably still holding firm, and they'd be quite happy now because what you've got there is that pop up. If it was really weak, you get this price action should have led to a big sell-off straight and through if it was weak and straight back down to 60 cents or so on. Instead, all it did was retest the lows, and you can see it starting to lift. Every time it retests, it got bought up, and then instead of falling short and building a lower high, it's starting to pop up. It's starting to get a bit of a run on. Okay, that took us up to that 92 zone. It pulled back, a deep correction again, and then what you've done is this shallow correction would have been an awesome little buy. And I think I had it on the radar and completely missed it. So, but that's actually preempting. This price action here is preempting a move through 92.5. So it's actually not too bad. I mean that it's a low probability trade, but you're getting in the unknown. So it. What am I trying to say? Low probability trade that it works out, but much more payoffs. It's actually quite a good technical setup. You're working off that higher low. You're anticipating this higher low is dragging in buyers after this price action, and this is going to be a major higher low at 80 with an inside higher low. This is all making sense. It's like a little puzzle. You're buying on that because technically that generally leads to a move, but it's not as high a probability as waiting for it to confirm. It's pushed up and out, waiting for it to confirm and buying on the rise. Potentially what we're seeing just here. It's pushed up, had a good little push out of that that consolidation zone through there, pushed up and out. We've pulled back. We've got one good day up. Today it's opened up. We opened up around 105. We're at the moment around 102.5. Yeah, 102. We've retested right down to 95. It's rejected that 95 again. But what I'd ideally like to see is I've got that pop up. I'd like to see a bit more action put in. And then potentially, and what that's doing is taking a bit more time to play out. That's going to catch the attention of a lot more buyers. And then you probably find that would lead to a nice healthy move up, a good move up. And that would have more legs to it than buying right now with a breakthrough 105, 106. And I think that could easily take you up and potentially through 130, but we'll see. From there, if that plays out nicely, all it is about managing the risk and potentially taking a partial and giving yourself at least some small gains on a trade. All right. All right, 1 second here, guys. Let me just get rid of that. So I hope that makes sense here, guys. All right, any questions just on that? I'm back now. Hope that's making sense, but I think this one is definitely, and this is what we're always looking for, a stock it's come down and you can see it's starting to curl back up again. And we're looking to buy it when it's rising rather than buying it when it's coming into support. I don't think that's the best way, and it's probably longer term. You're going to get chopped out of a lot like that, but when you're buying it on the rise, it's keeping you in the highest probability setups. You might have to give up a bit, but hey, that's the name of the game. To not to waste your money and jump into something that goes against you and just sit there for the next 6 months. You don't know, 1 month, 1 week, 6 years until it comes back again. You never know. All right. Probably have to call it a day there, guys. Now, I hope that all makes sense there. Um, any questions, just remember you can shoot me an email to support@tradesetup.com.au and I'll get back to you, hopefully, if I'm not too busy. But anyway, I'll definitely get back to you. Any questions. Hope you enjoyed that. We'll be back in on Monday at 12:30, so the same time. Hope you all have a good weekend, and let's see what happens in the next couple of nights. See if this market can kick in a little bit. See if that ASX can really running up 19. Oh, by the way, don't forget we had some really, really positive at 11:30, some really positive jobs numbers. So they were expecting up about 14,000 new jobs. Instead, it was up at 50,000. So yeah, really nice. So I think our economy is doing quite well. But anyway, we'll see how we go. We'll see what the ASX does. Whether that today might be a bit quieter, but the Aussie really did take off, didn't it? Let's just see where the Aussie is at the moment. Anyway, cheers, guys. Have a great weekend, and we'll speak to you again on Monday. Cheers, guys. Bye.